volatility in the market has certainly not come to an end, but is this just investor overreaction? Come on, we've gotten some pretty good earnings. Things look good from corporate America. A lot of questions about housing, but what does it all mean? Are we overreacting? Andy Serwer, managing editor of Fortune magazine, here to talk about it. What do you think? I mean, let's start with corporate earnings on this front. I mean, not so bad.
Yeah, no, pretty good. I think surprisingly good. Companies have been reporting profits, getting back to normal. It seems tech companies in particular, Poppy, reporting double-digit gains. Now the market's going up. I mean, the bottom line here is investors need Dramamine. I mean, the motion sickness is unbelievable. Up, down, up, down. We're going back into a double dip. Now we're recovering. First we're recovering, then now double dip. Now we're back. I mean, you know, it's very, very exhausting, really, and tremendous amount of volatility. No one really knows what's going on, so, you know, people are kind of getting fatigued.
But, you know, we just came back from the Fortune Technology Conference,
right.
Brainstorm Tech in Aspen, where a lot of heads of these tech companies spoke. And the question is, from what you're hearing both there and also internally with your sources, is it top-line growth we're seeing, or is it cost-cutting that's helping these companies beat expectations on the street?
Well, I think it depends what industry you're talking about. If you're looking at tech companies, definitely top-line growth. I mean, these companies are reporting real revenue gains. Industrial companies, cost-cutting and seeing some revenue gains. But, you know, it's a very uneven recovery. Let's start with geographically for one point, Poppy. I mean, you know, the developing world is actually doing very, very well right now. And if you look at places like China, Southeast Asia, Latin America in particular, a lot of people talking about beyond Brazil, Colombia, countries like that doing very, very well. So if you're exporting there, you're fine. The developed world, there's still a lot of leverage, debt, in the system, particularly on the consumer side and also on the government side. And that is going to slow things down, keep things slow.
It's a good point. You know, looking at a tech company that's not very consumer-facing, but it is huge, SAP. I talked to Bill McDermott, the co-CEO, yesterday, and he said, look, we're very bullish on Russia, China, India. When it comes to Europe, we are cautiously optimistic. And that CEO talk for, you know, we don't know what's going to happen, and that has to be as a result of the huge debt crisis across Europe and the big questions.
Right.
So when you have that big of a marketplace with question marks, not so shocking that investors are unnerved.
And not so shocking is a really good point, Poppy, because, you know, this is really playing out exactly as a lot of economists and market watchers had anticipated, say, a year or so ago. We had a tremendously severe recession, the Great Recession. The market hit a low in March of 2009, which is to say March of last year. Then we recovered. But everyone said, you know, be careful. This is going to be a very long slog to get out of this very deep hole that we've dug ourselves into. And it's going to be uneven. That's exactly what we've had. So why are people surprised? It's sort of surprising they're surprised, right? It
is. What's the one thing, Andy, that either you're hearing or that you think we need to see some sort of momentum to the upside here in this, 1,000-point range in the last 3 months that we've seen for the Dow Industrials? So what is it? Is it some sort of word on where the housing market is, that we're stabilizing? What is it?
Yeah, I mean, I think that we probably need to have some steady growth here in the United States. And also, I think we need a job recovery. I mean, that's very, very important. You know, we've been talking about how sticky unemployment is, how difficult it is to actually lower that number. A jobs plan from Washington is something that I heard people in Silicon Valley talking about.
Like, that they're not seeing that from the Obama
They're not seeing
administration?
that. No, they're seeing, you know, healthcare reform, financial reform.
Sure.
What about a job plan to actually get people back to work in this country and really focus on that? If that's the big problem, why isn't Washington focusing on that? I thought that was a really neat idea. That would be very helpful. And then a real combination of austerity and stimulus. I mean, that's the real problem for lawmakers right now, and Ben Bernanke and Tim Geithner. How much do you stimulate the system, but also how much do you make sure that we're not spending too much again and actually working to reduce debt?